Good morning. It is Friday, February 23rd. This is Option Pit Live. I am Mark Sebastian, your only option. I am joined by the Queen of the Candles, the Duchess of Doge. She is one, Leisha J. Leslie. Good morning. Happy Friday, Leisha.
Good morning. And as I always say, TGIF.
Indeed. Thank goodness it's Friday. Got an action-packed weekend of not doing very much, coaching some football, and
Fun.
that's about it. Catching up on some yard work, but
We have we,
looking forward to relaxing.
I have Mom's Weekend at TCU, so
Oh,
fraternity hosts the moms. We're playing bocce ball tonight, and then tomorrow night a wine tasting. Mark, do you
oh,
think the boys
fancy!
know their wines? We're a little scared.
You might want to bring your own. Just an idea. I mean,
It's
is the
sweet
wine
though.
tasting going to be like different variations of Boone's Farm? That would be
That's
my
what
question.
the moms and I were laughing about. We're
Yeah,
not sure. I'll give you the full report on Monday.
tonight we're having a delicious 2023 Mad Dog 2020.
Exactly. It's sweet
Good
though.
morning, everybody. It is good to see everybody. So, no big economic data today, but obviously, yesterday, Thursday, the 22nd, was a day.
Big day.
We saw the market break to new all-time highs. We've seen a single stock gain the single most ever in a single day. NVIDIA picked up about $300 billion in value in a single day. In one day, it is now the third largest company in the world. NVIDIA is worth more than Amazon. It's worth more than Google. It's been worth more than Meta for a while. So it was truly a major shift for the markets. I knew that there was some fear priced into these NVIDIA earnings. Leisha, were you kind of shocked by how strong the reaction was, not just out of NVIDIA, which picked up $300 billion, but how strong the reaction was, not just in the NASDAQ, but within the S&P 500 and the broad market as a whole? What were your thoughts on that?
Yes, I could see a rally for sure. 70, 80 points on SPX, yeah, but over 100 and nary a pullback all day. Nary a pullback.
It was a relentless rally.
It truly was.
The S&P just kind of went up and up and up all day. You had one little kind of dip when things got kind of overbought. We peaked out at 50.95 with S&P, but S&P futures, which are like the tradable form of the cash index, they're trading over 5,100. My guess is that they're going to pull the cash index up with it. What's our upside here and downside on the charts? Because we are climbing this wall of worry, and I know we're going to talk about it a little bit more, right? But what are your charts saying on the upside? And then I want to talk a little bit about what I'm seeing in the options.
Well, do you think there's still a wall of worry after yesterday?
I mean, yes, because, and I'll explain why I know there's a wall of worry once you can tell me once you kind of lay out the charts, unless you
I
want me to dig
believe
in.
I will show you. Here's my SPX chart. Very, very bullish. And as you can see, it's interesting how it opened right on my resistance line, which is now new support. So support in SPX will now be 50.42. I mean, it may not happen next week, but I believe we're going for 52.5.
Wow.
I really do. You might get a little, kind of some stuff like this, like we had before this rally. But yeah, I think the rally's on. I really do.
And I don't disagree with you, but I think that this rally is being accompanied by call chasing, which means traders with YOLO are buying calls. And I think we're starting to see some stock replacement in the indexes, sell stock by call. And the reason I know this is that I'm looking at the call prices on March expiration SPX calls. And yes, the VIX was down yesterday, down about 75 basis points. But on a 105-point rally, the mechanics of the VIX itself, I don't want to get all wonky with VIX mechanics. I don't. But the mechanics on VIX basically state that if the S&P is up 1%, the VIX should be down anywhere between a half and 70 basis points. On a 2% rally, it should be down 1 to 1.25 points. So and closer to 1.25. That's just the raw mechanics. So then when I look at the implied volatility on the actual strike prices, so if you want to share my screen here, I'm going to show you what I'm seeing in SPX. If we go to like the 51 quarter calls, the 5100 or 51 quarter calls. Now these are live trading right now, so we're actually getting data for today. The implied volatility actually went up yesterday. So on the 21st, the 51 quarter calls had an implied volatility of 1128. They had an implied volatility of about 1135. So it's not a huge move. But for calls to see an increase in implied volatility on a rally is unusual.
Well, can I refute that a little bit?
Always, this is an area of an open forum of discussion.
I know you and Andrew are the VIX experts, but you have to admit, I mean, yesterday was a giant reversal.
Yeah.
Giant reversal. So people that had gotten out to be flat were like, what, get me back in there, you know? So I think VIX should have been up a little bit. I think it probably will come down today.
I would say that if we have an inside day, it should come down. On a day we're up 2%, right? That's 2x what the VIX is pricing. So there's some realized volatility priced in there as well. But normally we would expect to see, even if the VIX doesn't come in as much because Volta isn't depressing, we wouldn't expect strike vol to actually be going up. And on the downside, it was actually even stronger. There was some put. So when I say we're climbing a wall worry, that we're going to go up, but there is traders are sourcing alternative ways to be long than going just straight long the physical because they're a little bit nervous, and you also see some stock replacement, which is I'm long a lot of individual stocks. I sell those, and I sell a bunch, and then I buy calls because I want leverage on the upside, but without really the downside risk. So we're seeing asset managers reallocate and using options more and more. So there's the S. Now the next one, everyone's like, what about the Qs? The triple Q. If you thought the S&P had a good day, let me introduce you to my friends at the triple Q, and then MGK. Holy cow! MGK is the 90 biggest stocks in the S&P. It was it outperformed the Nasdaq. It was up to over 3%.
Amazing.
So what are your charts giving us in the NDX or the Qs? And I don't know if you've ever looked at MGK, but
we can look at it.
It has been a crazy one.
Yesterday, the Qs stopped right at their previous high right there from the 13th. They stopped right there. But now they're trading a bit higher this morning.
Mm-hmm.
I have resistance pretty closer in 444.25. And the Qs. They might have a little snag there. Around 444.
Well, then for the S&P to keep that rally, then that would be a rally of the others, and the Qs maybe take a breath. That's what
possible, right?
I mean, that's the only way that the S&P could pick up 150 points and the Qs hit resistance.
Well, I'm saying 52.50, not today, dude. I'm saying in the next
Well,
few weeks.
you heard it here first, guys. Leisha predicts S&P closes 5250 today. No, I understand.
I will need to extend my pitchforks here for the cues.
But we're in a bull market, and so I do think that you're going to see the S&P higher. It's just, do others start to participate in this move? Your and some are. And actually, I want to throw this one out to you. Under the radar, right? Everyone's talking NVIDIA. Everyone is talking about Microsoft and Meta. JP Morgan is at an all-time high.
Sure is.
So big banks are having themselves under the radar. Only on a day like yesterday could JP Morgan be hitting an all-time high, the largest bank in the country, and nobody is paying attention.
Yep. I have 188.44 on that one.
All right.
So a few more dollars.
It certainly could move. Some other kind of news that hit yesterday was Square earnings. We've talked about how miserable PayPal has been. Square came out yesterday, and it's up after hours.
$10.
Yeah, about 16%. That is a really strong move. The straddle price was pricing in about a 13% move. So Square, like NVIDIA, is outperforming the expected move.
Yeah, there's a double top there at 80, just over 80. It'll test that possibly today. And then above there we have 83.83.
83.
Nice move.
It is a really nice move.
Look at that little doji off the support median line there.
It's pretty impressive.
Yeah.
All right, now couple other if we're going to get a move higher, and some other areas in NVIDIA, everyone's talking about AI, and everyone forgot that NVIDIA has had an explosion like this before, and it came during the Bitcoin era, during 2020, right, when Bitcoin exploded and got to 65,000. You get a merger of this AI boom, and miners start to enter in back into Bitcoin. What are you seeing in the crypto markets right now? They just announced yesterday, Valkyrie is coming out with a 2x Bitcoin ETF. If you thought Bitcoin was crazy, let's take Bitcoin and give it a bunch of cocaine and see what happens. So a double levered Bitcoin ETF, that's heading our way, folks. That is going to be a wild one. What are you seeing in Bitcoin?
Well, the chart is still consolidating. I would say this is still a flag, or maybe it'll turn into one of those descending triangles. We'll see, but I think it's still bullish here.
Okay.
Support at 50,620.
All right. Well,
below there, maybe it'll go lower.
So here's a question for chart people that are watching this, right? You've got multiple pitchforks there, and Bitcoin isn't in any of them. How do you read that kind of area when you're looking at Bitcoin?
Well, I just go horizontally. I grab the lows there, those most recent lows. It's held there at 50,600 several days now for over a week. So that will be support. Below there, it will revisit here. That comes in 49,150-ish. I don't need to have a guideline for that little space in there, I would say.
Okay. It's just interesting, right? The charting is a science, and you're a professor on it. So I just figured I'd give people a minute to a minute to look at it. All
Your
right.
MACD is rolling lower. Your MACD is rolling a little negative though, so
And
needs to hold here. Needs to hold that 50,600.
and that's generally pretty bearish if MACD rolls over.
Generally. But
Yeah.
as we saw in SPX, it could be short-lived, right? SPX and NVIDIA could be short-lived, like right there.
Okay.
After today, it'll be turning positive.
All right.
Yep.
Well, let's to get a little more perspective on the AI craze. Let's bring in our compatriot, the Oracle of Options, the president and COO of Option Pit, Andrew T. Giovinazzi. Welcome to the show,
How do?
Andrew. Good to see you.
Good morning, Andrew.
I tried to clean up my act somewhat today. So
yeah, you look.
I mean,
you
relatively.
woodsy sharp.
No flannels today. No.
You look woodsy sharp.
Woodsy sharp.
Yes. So Andrew, obviously NVIDIA completely blew higher. Went straight to the moon. Didn't hit the 1300. Of interest prior to earnings. Traders had bought over 1,300 or over 50,000 of the 1,300 NVIDIA calls that expired today. Those will go out worthless.
Right.
But it did rally over 100 points and just exploded higher. What is your initial take on this move?
I mean, how do you price a company where the revenues are going up like 200% a year, or the earnings go up 200% a year like that? So they keep giving it a multiple, although I believe the multiple is compressing somewhat. So like what, in the next 2 years, NVIDIA's earnings are 10 times what they are today in the next 2 years, if they can get away with that.
The trailing multiple did not. The trailing multiple did not move.
Oh, it didn't move.
The rally completely
killed it.
It rallied 105 points, but the earnings went up enough that multiple just didn't move.
Right.
The forward guidance there is pretty high, but you're assuming they can hold 75% margins for the next 2 years.
Well, yeah, and I think you said that before. It's something we talked about, like how long can they stay this far out in front? And I think but what do people look at? They're like, okay, it was up $100 yesterday, so it can do it again tomorrow. I mean, we've seen. I mean, you have to be realistic about a couple of things, right? Like for today it's a lock that we're over 5,100 SPX, right? We're too close not to, right? So. In the rooms this morning, I'm going to do the dummy stuff and buy the dummy calls because I think we're going up there. So NVIDIA, we're 200 points away from 1,000. I don't know when it gets there, but it's going to tick it. It has to. Too close. So I'm just going by kind of the law of the big round numbers.
I mean,
somewhat
the old saying was, when it's going to if it trades 90, it's going to 100. That was I mean, that is a 100-year-old saying from the floor.
For sure.
And I think, look at
is
Square,
the saying
another
if
one you bring up. I like Square for 100. Why not? Because
it breaks over
the market likes it, they like it.
Why not?
If it breaks over 90. So my question is there a saying that if it's trading 900, it's going to 1,000? That was my question.
It just, it has again, I'm not saying it's doing that today, but who knows?
It's up 2% right now.
Yeah.
Yes.
Now another thing too is if NVIDIA is widely held, and you also think about how these kind of rallies materialize. It's very widely held. The institutions really aren't selling it. You don't have a lot of willing sellers. And that's how things go up. We talked about SMCI last week just being very squeezy because there's not a lot of float. Now, NVIDIA has a different story. It's wide float, but widely held, and people aren't selling. So, we've been around this game long enough that you think, okay, I try to think sometimes when I'm trying to set up a trade. What's the craziest thing that could happen? Okay. And then think crazier. And that could be the potential for when 90% of the the air, of the financial press. Like when I look at Twitter, I don't really use it to say stuff very much.
It's a great source for information.
But
it
you
really
see,
is.
like,
called
I
X.
try to follow as many people as I can in one account, and everything is like NVIDIA, or they're arguing about it, but that's all of the noise. So when you have 80% of my feed looking at one thing, you extrapolate that everybody's looking at it. So now trade number 2 would be NVIDIA going there. What does that do? Right? What boats does that pull? Does it pull SPY up? Does it pull SPX to 5,200? Which could be a more accessible trade, right? Which could still give you great returns because the option prices are less.
Mm-hmm.
And okay, NVIDIA is going to do all this great stuff. It's going to grab a lot of energy. It's going to start to pull, get people in. And then now all of a sudden, all those cheapy junk calls in SPY and SPX, right? They can do the double, triple. So it doesn't, and just NVIDIA going up doesn't mean all these other little goodies can't, follow along. And that's kind of where I spend my time with students.
Yeah.
Because NVIDIA is like, it's a $50 call or whatever, or a $25 call. Not everybody wants to play at the $2,500 for a one line,
Right. Well, that's why I developed the zone trades so that we can trade.
Oh, what a segue!
NVIDIA.
What a segue.
And that, so we've been working on a lot of the stocks that are really high quality have gotten really expensive. They don't split very often. And so we at Option Pit have been really working hard at developing strategies for smaller retail investors to be able to trade these big names, because we want everybody to be able to participate in trades around NVIDIA or Microsoft or Meta. If you're interested in zone trades, feel free to look at our YouTube channel, and we've got the video presentation of my earnings breakdown posted right there. But Andrew, this brings up, you brought up a very exactly what I was about to ask you about, or I want to talk about all three. So as strong of a day as NVIDIA had, right, picked up $300 billion in market cap, largest single day move in the history of the market. SMCI, super microcomputer, was up 33% on Thursday.
Well, I was going to interrupt Andrew and say, which one's going to 1,000 today? Most likely SMCI.
SMCI.
Yeah, pre-market is currently down after that 240-point rally. It looks like it's down a little, down pre-market. But this one is a different story, right? NVIDIA, the SMCI is being short squeezed. There's not a lot of float. And it is hard to trade. It's a small, it's a $50 billion company. It's no longer, it's in the Russell 2000, but now it's too big to be in the Russell 2000 with this run. It's in the middle of a short squeeze. For folks that are unaware, one, what is a short squeeze? How do you spot it, and how do you not get run over? All right. Andrew, you want to hit first, or Alicia?
Either way,
Andrew?
the easiest way for a squeeze is just to look at, call put parity and see where things are trading. It's end of day now, so it's hard for me to see exactly how the pricing closed. But generally, you basically take a call minus the put price and, out of the strike price, and see if the options are pricing essentially somewhat where the underlying is. And if the puts are super expensive, basically what it means is you buy a call, sell a put, and buy SMCI for maybe $25, $30, $40 under the current market price. And you just do the arithmetic. You take the long call and sell the put. If you get a credit for it, take the credit, subtract it from the strike, and then just see where you are versus the underlying price. If that number is way below, the market makers are being squeezed, and the hot stock is hard to borrow. So it's the easiest way to tell that. We actually have an indicator at Option Pit.
It closed at about March closed at about a $3 discount. So not insane, but enough.
Yeah, something. What it means is, though, that there's the stock is not easy to borrow, which also is going to add to the volatility of the moves. It might be priced at the March straddle's $200, but it moved $200 yesterday. So, I mean, it's, again, relative, the options are not crazily priced. They're extremely expensive, but stocks move in 150 or $200 a day. And if there is some short interest in it, that means it can fly on the upside. So,
yeah,
I mean, you're going to take it down 8 in. There's lots of ways to, put trades on here. I would, spreads are cheaper. But when you're moving 50 or $60 a day, who cares, right? Spread's okay.
Yeah. Another way that for people that don't really want to learn put call parity, which you don't necessarily have to, another way to kind of just simply look at it is look at the change in average volume. So Andrew, do you know how many shares of SMCI traded on SMCI on December 29th closed $284. How many shares of the stock do you think traded on December 29th?
Oh,
I know you don't know. Just take a guess.
20 million shares.
All right, Leisha, what do you think?
Well, I can see it on the chart here. So
Okay,
continue.
The answer is 2 million.
Wow. Okay.
Wow.
All right. Now, yesterday, it's now traded. It closed $975. It traded 25.4 million. So in the course of 6 weeks, trading volume is up 2x. So it is trading every day about 50% of its float. For those of you that don't know what float is the amount of available shares to actually trade in the marketplace. So, for instance, in Amazon, Jeff Bezos owns, I don't know what percent he owns anymore, but let's say Jeff Bezos owns 10% of the company. If he's just holding those are not in the float numbers, right? And the shares the company holds, those are not in the float numbers. So options that Elon Musk holds are not in the float numbers. So there's only 47 million shares afloat in SMCI. They're trading 50% of it in a single day. Andrew, so Leisha, I don't know if you've looked at a chart of this. What do you see anything in this in the insanity of this chart?
Sure. It's interesting. You had the bearish engulfing on that very huge reversal day.
Yeah.
But then directly thereafter, you had a high wave candle, which is a high, long upper and lower shadows, which means mass confusion. Then you had a little bit of a kind of a little break there, but it helped my pitchfork. And then when it gapped open, just took off and blew through the median line. We may be down here now, but I don't think it's over in there. I have to say.
All right. It's interesting. It is a short squeeze. One of the things you have to risk with short squeeze is they inherently bring in high volatility. So you will see days where it's gapping up and gapping down, and it's up and down 200-300 points. All right, now it's time for a new section. All right, and if you can, producer, can you switch Andrew and I to the smaller one and make Leisha the larger image?
Wait,
in
what?
the thing?
Oh,
Because Leisha is now judge, jury, and executioner.
Oh, great!
All right,
Just what I want.
Andrew and I are going. It's our stock of the week. Andrew and I are this week's stock of the week. Next week we'll be doing NVIDIA. This week it is Apple. All right, and Andrew and I are going to take one side of the coin for Apple, bullish or bearish, and Leisha, J. Leslie, judge, jury, executioner, and she can also give the queen's pardon if she so chooses. We'll pick a side. So, Andrew, do you want to go? I can go bear or bull. I will let you choose your side.
I'll go bearish for Apple.
All right. So I'm going to go bullish. All right.
Okay.
And I'll tell you. All right. Here, and I'm going to take 30 seconds to do this. All right. 1, the S&P is at an all-time high. 2, Apple is one of the few names that has not participated with this huge rally that we've just had, not getting pulled up. 3, they are massively trying to catch up in the AI game. I wish they hadn't got distracted with those stupid goggles. All right. And we concentrate on the AI business. 4, I like the look of the chart. 5, the implied volatility is cheap. And 6, if we do see money pull out, start to take a breather on NVIDIA and some of these other names, the natural place for it to land is the 5-star hedge fund hotel that is Apple. So my prediction, I think Apple near term going back to 190 and maybe up to 200. There's my bull case. 30 seconds, done.
Apple, I will show you the chart here.
No, you gotta let Andrew make his bear case first.
Oh, I'm sorry.
Remember, you're judge, jury, and executioner.
I thought Andrew
Then you
had
can make a
chosen.
decision. Yeah, then you
Go
can
ahead,
make a decision.
Andrew.
No,
I'm
I mean,
sorry.
my bear case is basically for all Mark's reasons, but the fact that we are at all-time highs. Apple is not. Apple is not participating, and I think money's leaving it. Now, I will say I'm only as certain as a put spread and not a put, because I am long some put spreads, and I'll talk about what I have as a contra side. But I did pick Apple as my short because it has been underperforming so drastically. Although yesterday was a little grumpy for me. But anyway, but yes, there we go.
All right. So there you have it. There are your two sides of the Apple coin. And now the queen, the judge, the jury, the executioner, will make her verdict.
I'll show you what the charts are saying. Apple has honored this support level here 3 times now, is bouncing off of it with a doji 181, with a doji 2 days ago, and looks clear sailing here to, as Mark said, I have 190.66. Now, yesterday it did close above the 200-day. But you do have some headwinds here on the volume profile. These large nodes show resistance. And you do have the 21-day and the 50-day between here and 190. So it does have some headwinds.
All right. There you have
I'm
it.
sorry, I don't have a true conviction. It could be a struggle to get to 190. How about that?
All right. There you have it. Well, one of the things that has never come to fruition, and thank goodness, is Apple has never forayed into creating a Apple car, as has been rumored for year and year. And if they do, I think it'd be a ginormous waste of money and nothing I would ever want to ride in. But you know what ride I will always take? It's a ride in Andrew's trading vehicle. In this section, Andrew's going to give us a ride on education and show us why and how he's selecting his way to trade. Take it away, Andrew. Leash and I will go grab our coffee.
All right, Max, if you could put up the first slide. Today we're going to just talk about how do you choose if you want to trade VIX or SVIX. So the first slide here I have is VIX. So basically VIX is the SIBO volatility index. And one of the rules I use for trading VIX is the secret in it really is how you trade the downside, because it's a way to sell volatility, quote unquote, without actually having to sell contracts. So you buy puts in the VIX, volatility goes down and your puts go up, make money. So it's a way to sell volatility without actually having to sell contracts. Now, the trick I use is if you look at the chart that that Max has up there, what I do is the assumption I make, and I've been trading for 30 years. It's just some things I just have learned by observation, that if I want to see what the downside for VIX is, I don't tend to go lower than where it's been the last 30 days. So if I'm making a trade, I'm trying to create expectation for vol puts. And the reason why I like trading volatility puts, as you can see from the chart, VIX has a relatively cyclical nature. You know, we can go into mean reversion, all that stuff, but it's mostly like volatility goes up, then it goes down. Vol goes up, then it goes down. So it's a relatively easy thing to trade because it's cyclical. It's not like NVIDIA that's kind of going straight up to the moon. So it has different trading profile. So when I look at the VIX now, it just, you know, we just have what I would call an event. FOMC, NVIDIA, and the event, I would say, kind of broke the ice. And you had extreme acceleration, market accelerated up. Now, what I would say is likely it's going to start to slow down a little bit. If it slows down, VIX drops. So how do I choose between VIX and a short vol product? Max, you can do the next slide, is SVIX. So SVIX is the inverse. It's an inverse product that basically holds short VIX futures. So when volatility goes down over time, SVIX goes up. So in this particular case, to sell volatility with SVIX, you buy calls. And currently right now, I'm long the 41 calls. So the trade I have on is I'm long calls and SVIX for about $1.40, the 41 calls, and they're underwater about 20 cents right now. And I'm long some put spreads in Apple, right? That's the trade. Although I did sell half the put spreads this week. I made some money on them, not a ton, but some. So now what I'm leveraged is I own 2 SVIX calls for every 1 Apple put spread. And I want to let that run till the end of March. Now, the difference between the 2 products is how they settle. So with SVIX, if volatility drops, you can sell a forward contract and create a calendar spread on your call to kind of lock in some money, right? Because volatility, sometimes it goes down, sometimes it goes up, right? So with SVIX, you can see once we hit my strike at around 41.5, I'd like to sell some forward calls in SVIX because the settlement there is the underlying for SVIX. So if you take delivery on shares by owning calls, you're going to get SVIX as an underlying. VIX is different. It settles to cash. So if you're trying to sell weekly options in VIX, those will settle to cash, but they settle differently because the one thing that VIX and SVIX has in common is both products trade on the underlying future for VIX. The difference is SVIX will trade on a combination of the near and next term ordinary future, and VIX options will settle. They settle to VIX every Wednesday morning, but the options price off the future tied to the settlement. So even though VIX cash is something, you have to understand what the VIX future price is for how the underlying options are going to trade. Now, there is a myriad ways to trade, use the future pricing to build in some edge for an option trade. But the difference really is when you're trying to decide SVIX or VIX is how you're looking towards settlement. So right now, if I want to trade where I could where I feel that now that we've had this event, there's going to be a building, right, of volatility is going to slowly collapse, which will bring the whole VIX future term structure down. SVIX will participate pretty well in that, right? And I'll be able to potentially sell calls in front of it. So right now, I'm choosing to buy some relatively inexpensive SVIX calls for a run higher. And I expect SVIX to get to its old highs of the last 30 days, around 41.5. And my calls should double. So the idea of the trade is you see where your product has been, right? That will establish a vol low, and then you could figure out what your options will be worth, right? So for what I paid for my options with the time to expiration, if I get to that number, then my call should double. So I usually look for at least a double on my options if I can. And that will be my trade. So my vehicle this week right now is SVIX calls. And I am short some Apple as a loose hedge against it. And I want to let it run till March expiration and see if we could actually get some lift. Because the one thing that will happen is every day that those futures drop, SVIX goes up a little bit. So we could have a continued collapse in VIX and future prices, and it will just keep building for SVIX. Now, usually it's a short-term trading product for me for options, not a long-term one. So that is my vehicle for the day. So one is have an idea where you think VIX could go. On the downside, if you want to trade the puts, don't be overly aggressive on how low you think VIX can go. Generally, it has a hard time going lower than the last 30 days low. And understand what you want around settlement will help you choose which vehicle you want to drive. There we go. That is my vehicle trade for the day.
All right. Well, folks, we'd like to know what your thoughts are on Apple, since you heard Andrew and my thoughts, and what your thoughts are on his trading vehicle. Please leave us a comment on the YouTube channel and like and subscribe. I want to quickly go through some interesting order flow that I saw yesterday before we wrap up. This was in Apple goggles will push the stock for 10 to 15 years. They're absolutely amazing.
I think
all right, Mike.
I'm going to say that's a bullish case right there.
That is the bull. That is the bull case.
Hold on, let me practice. Wait a minute.
My son has a Quest 2, and he does not use it very much, and it is cool, but it's a little wonky to use. So Marvell is one of the chip makers that has not announced yet. Their earnings are March 7th. I got a trader buying the March. The stock is $70. I got a trader buying the 80-85 call spread for regular March. They bought 10,000 March 80-85 call spreads. They paid 62 cents to go long. And so they're basically getting almost 10-to-1 risk reward on that. Call it 9-to-1. And they're looking for blowout earnings. How many times do you think Marvell will mention the word AI when it is announcing its earnings?
Yeah, wow, it's weird too, because the last couple cycles, I'm just looking at live all chart. The last couple cycles, they didn't like the earnings reports in the last couple.
They have not.
Maybe this one will change the trend.
That's what I'm thinking.
Gap down.
Is there one chip stock that didn't rip like a ton?
Intel.
I can't think of it.
Intel.
Oh, Intel. Oh.
Which is interesting because they literally came out and said, we're going after NVIDIA and we're going to be ready to compete with them next year. And everyone's went, yeah. So
nobody believes that. You basically have a decade of Intel like saying a lot of stuff and not delivering anything. So everybody's like,
well, we'll see.
Yeah.
All right. Now, it is 9:15 Eastern, 8:15 Central. As we close the show, S&P futures are up 12 and a half. NASDAQ futures are up about 41, so they're up about 0.25%. VIX futures are down 20 cents. Bonds are flat. What are you expecting for the trading day, Andrew?
Up. I'll close above 5,100. We're too close, and the market wants it. Sorry, that's what it is.
Alicia?
I'm with Andrew. Last night recommended buying some XSP calls for the day.
Ooh.
I think that your XSP calls on the open are going to be very good. I think we absolutely could see a move higher. S&P futures are over 5,100, but I would not be shocked by the 5,100 kiss and then reverse. So it's just up in the air. Are we going to have are we going to kiss 5,100 and that turns into a little bit of a ceiling like 5,000 was for a little bit? Or do we get just a clean break? I'm very interested to see if we get a little reversal. If we do, I could see us.
You're in the kissing camp. Is what you're saying. You're in the kissing camp. You're going kiss. You're going the kissing camp. I
think we might kiss and reverse. I do. All right, folks. It is 9:15. It's time for us to wrap up. We are here every Friday at 8:30 a.m. You can find it here on the Trader Hub, on the Trader YouTube channel, on the Option Pit YouTube channel, or on my Twitter account at Option Pit, Leisha's Twitter account at Leisha Leslie, right?
No, Profits and Pumps.
Oh, at Profits and Pumps. Thank you. And I believe you can even find it on Andrews at Option Vol. We are looking forward to seeing you guys next week. So for the Oracle of Options, Andrew T. Giovinazzi, and the Duchess of Doge, the Queen of the Candles, Judge, Jury, Executioner, Leisha J. Leslie. I am Mark Sebastian, your only option. This was Option Pit Live. Have a good Friday.
Have a good weekend, everybody.
Thank you.